My name is Mohan Vivkanandan. I'm the Group Executive for Client Coverage at the Development Bank of Southern Africa.
My name is Pedro Martins. I'm Brazilian. I work in a hedge fund in Brazil. I'm partner on it, and I'm working in the financial market for 7 years.
I'm Sherry Kang, and I'm a financial journalist at CNBC, and I mainly cover the Korean markets.
I found that the program has been very, very helpful for me. As examples, just to try and understand how do you think about pricing for loans, and when could you use derivative instruments to hedge risks, for instance. And all of those have been very helpful, especially because we have multiple conversations with clients on a weekly basis, and just to be familiar with these concepts and to be able to apply them to the work that we do.
It's not easy to have the combination of people that you can find here. You have people from everywhere in the world. They are all in a good point in their careers. Everyone is well experienced in their own areas. So you have a great experience to know them and get from them the best of their experience in the markets. The network is the most important thing that you get from here and you take for your life.
The fact that you talk macro econ, debt, and the capital structure of fintech, China, financial markets in China, I think it can all come down to really boost your career. It really changed the way that I look at the headlines, earnings reports, and the questions that I ask. The depth that I get because I took MSGF course is really different. I feel it. I feel the difference every day as well. And I think it's definitely gonna be a turning point in my career.
Really spend the time, not just when you're on campus, but also the time before and afterwards. And also on a continual basis engaging with your project team. Then I think, the quality of the learning is going to be significantly greater. So again, it's really about an investment. You're investing your time in getting something. It's not just the degree, but it's the knowledge as well.
For sure, come with your full heart here. Yeah, you are coming to a place to study, to knock your head on different kind of subjects and to know people. They are from different places, different cultures, and they all want to know you and they all want to know better about the finance and the global macro world. So come with it with your open heart and you're going to have everything that you need from the program for sure.
Get ready to really just get your hands dirty with all the quantitative stuff. Time management will be crucial for 1 year, but at the end of the day, you will make amazing friends. Make friends, keep them, because you will have an amazing MSGF family, and I have a feeling that they're going to stay in my life for a long time.
I'm Peony Lee, the Vice President and Responsible Officer of First Capital International Finance Limited, and I'm the Director of Hong Kong Securities Association. MSGF has been an eye-opening and life-changing experience for me. When you really think about it, to succeed in the ever-changing financial world, it really comes down to 3 things: knowledge, experience, and network. For knowledge, in MSGF, you're learning from the top faculties from the best business schools in Asia and US. MSGF is a mixed platter of the hottest topic in finance. It gives you a depth and width of financial knowledge that you cannot get anywhere else. For experience, all the classmates are expert in every area you can imagine, in fixed asset, corporate finance strategy, and they have experience from Europe, Wall Street, Africa, China, sharing industry knowledge and insider experience that you cannot learn anywhere else. And for network, the program provides 2 alumni networks from the best business school in the world. They bring you so much resources and opportunity for advancement and collaborations. Joining MSGF has been a very empowering experience for me in the finance industry. Not only it equips me with knowledge and skills that would help me advance and break the glass ceiling, I've also made lifelong friends who strike the perfect balance between managing a company, a family, and keep upgrading themselves at the same time. They are my lifelong role models.
Okay, hello everyone. Good morning, good afternoon, or good evening to everyone, depending on where you are. Thank you for joining us at the MSGF online seminar today. My name is Catherine Low. I'm the program head of the MSGF program. So, well, we have a very special seminar today, which is, well, one of the integrative project topics from our graduates in the class of 2020. So let me first introduce our two well, speakers for today. They are Joe Turner, who is based in the US now. It's a very early morning for him. So hi, Joe. Thank you for supporting us in the very early morning, your time. And we have Nico Kusuma, who is based in Indonesia. Hi, Nico. Thank you for supporting us as well. So I guess not every one of you know about the MSGF program. So let me take a few minutes to share some of the program highlights. And obviously, one of the program highlights is about the integrative project. And I will talk more about that. So first of all, well, as the program name says, it's a joint partnership between the HAUST and NYU Stern School of Business. And well, we combine the best of both worlds, and we have the theories and practicalities for both the East and the West in our curriculum. So for the program, well, the format of the program is, well, based on a modular format, which means there will be block weeks of, well, classes once every 1.5 months within 1 year time. So this format fits very well for busy professionals or working executives coming from all over the world. And for the curriculum, we are very much focused on finance. So our alumni has mentioned about the diverse range of the finance topics well, in the program, so that will allow them to have the foundation, solid foundation of the finance knowledge, as well as more insights on the different hot topics in the finance industry, which is very relevant to the times and also very helpful for them in doing their business. So I mentioned about the project, which is the integrative project. So this is a 1 year long project throughout the whole program duration. Basically, students will start to form project teams, brainstorm project ideas, which might be, well, very hot issues in the market currently, or some potential hot topics in the coming years. So one of the topics that we have learned about is the eSports last year from our two speakers, and they have very practical and valuable experience working on the project, so they will share more details during their presentation. And for the students in the program, it's actually a group of executives, professionals from a very wide range of fields. Most of them work in the finance industry, or some of them work in the finance functions in other industries. But all in all, actually, we have a very diverse range of well, demographics as well as geographics and experiences. Well, so we form a very productive learning environment in each of our courses. And well, not only that, we have world-class faculty teaching the program. And yeah, somehow we also have some industry practitioners to share their latest insights. So we always tell our students and prospective students that we not only learn from our faculties or the industry practitioners, we also learn from the peers who have very wide range of experience well, in a lot of industries. So upon completion of the program, the students will graduate with one joint degree conferred by both HAUST and NYU. But it's not just one degree, because they are joining two networks. So basically, they will become alumni from both HAUST and NYU. Yeah, so you can see or take a glance of our alumni or student base. They are actually located all over the world, well, such as our two speakers for today. So probably you can find our alumni or students anywhere when you travel around the world, and they are very experienced with average of 12 years of work experience and well, over 10 work locations and over 15 nationalities as a whole in the program. Yeah, so if you are interested in learning more about the program, so feel free to browse our website or just follow our social media channels, especially our YouTube channels, like the videos that you have just watched. So we have more alumni share their experience and insights in the program. So you can get in touch with us through email or by phone. Yeah, so without further ado, I will pass the time to our two speakers to share their insights of the seminar tonight. So it's about esports competitiveness and monetization and also the stakeholder value. Yeah, so I know esports is becoming more and more popular. So basically our two speakers are actually a big fan of the esports and they're well playing it and they have more insights to share. So over to you, Joe and Nico. Thank you very much.
Great, thank you. And morning, evening, everyone. Hopefully you can all hear me okay. Give me a shout if not. So probably worth both of us just doing quick 2-minute intros on our backgrounds, just so that you have that context. Getting alerts on the audio. Yeah, so I'm Joe Turner. I'm currently in the US. Might be able to hear not a traditional Brooklyn, New York accent. Grew up in the UK, moved here about 5-6 years ago with Blackstone. Was previously working in the London team for 5 or 6 years, doing restructuring and special situations advisory work with Blackstone. Before that, Citigroup, leverage finance, and a degree in economics in the UK. Now managing director in the New York, in normal times, New York office, but spent the last year or so kind of in a few different places through the US whilst finishing the course. So Nico, do you want to do the same, just kind of 1 minute?
Yeah, thanks, Joe. Hi, everyone. Thanks for joining and thanks for taking the time as well. Just a quick intro from my end. My name is Nico. I'm based in Jakarta, Indonesia. Pretty much doing corporate finance throughout my career. And I'm currently working with Mandiri Sekuritas. It's a securities house. It's a fully owned subsidiaries by Bank Mandiri, which is one of the largest state-owned banks in Indonesia. So I'm pretty much doing M&A, structured finance, and some other corporate finance advisory at my work now, helping mostly like Indonesian conglomerates and state-owned companies on their corporate actions. Happy to be here, and I'm handing over back to Joe.
Great, thanks, Nico. So why don't we start screen sharing? While Nico pulls it up, just a bit of background in terms of, I guess, how we chose the project. The course and the project, I think, is certainly encouraged to. There's a bit of background noise. I'm not sure if someone's on mute. Certainly encouraged to. There we go. Certainly encouraged to choose something that's A, of interest to you, B, unique, and C, original. We had the opportunity to look through a lot of past projects and thought that eSports was an area that hadn't really been studied, and we'll go into why we thought that was exciting. But just to turn to the first page, Nico, I think, when you say esports, gaming, video gaming, people imagine, me sitting on my couch playing Sonic the Hedgehog. That is not, what esports has become nowadays. Esports is now kind of more than $1 billion revenue industry that's growing extremely fast. Now, a lot of these figures on the screen are pre-pandemic, but the move to gaming and esports has only accelerated, as I'm sure a lot of you are aware, through that process. People, not having much to do, but but go to their gaming consoles for entertainment through the last year or so. So it's a huge potential market, 650 million people by 2023. But the value of that industry, the value of the market, depends on the industry's ability to monetize those players in the same way that it does with any sport. And this, and Nico will go into this, the industry is dominated by a few big, certainly very financially motivated stakeholders at different levels, but there is a real incentive throughout the industry to monetize gamers, and we put together in this report a few recommendations on how that could be done. So the importance of this report, beyond just it being kind of interesting and the size of the market, is that no report like this has ever been done. This study, the ability to monetize fans and what the drivers of that are, has been looked at in a lot of physical sports. So a lot of academic and kind of broker note type research has been done to look at how competitive are sports and what does that mean for engagement and monetization, because it's a fairly well-known concept that nobody will want to watch an uncompetitive game. If it's a complete walkover, it's probably less interesting than a tightly fought competitive battle. And so a lot of people have looked at that concept of competitiveness and what does that mean for engagement and therefore monetization in physical sports, but never in esports. And we'll go into how our research on esports compares to physical sports and the work that's been done before. So instead of just giving you a lot of words, we thought we'd also show a quick video just to highlight the excitement around this industry, the size of the industry. So Nico, if you want to click play on that, we'll back in just a 1-minute video.
Doesn't go that mind share. It's a little bit of an arms race of who's going to be doing it best, who's going to invest more people and more resources into esports and competition. We're in a make or break time for esports, right? Like, this thing needs to continue to grow at the rate that it's projected to grow. People talk about it by 2020, it's going to be a $1.5 billion business every year. All these investors have come in, buying the hype, buying the speculation, where this thing is going. If it doesn't go that way, this whole ecosystem is at risk of collapsing.
We wanted to go to China and set up a show in the Bird's Nest, the home of the Olympics. That presents a lot of risk, and it's scary.
This is the exact track in which Usain Bolt broke his own 100-meter record.
Most sports have 100 years of history. We have under 10. We know that we need to develop deeper bonds with potential partners and sponsors, and we are incredibly motivated.
So much of it has been about Faker, as it always is, but this year, when they've needed him most, he has played better than ever before.
We wanted to create memories with these big events, and we know that those memories are what carry on. When people look back, they think of these kind of flashbulb moments. Those are the things that you can't really value because it was a moment that all of us will remember forever.
The upset is complete as the kills come through. The SKT dynasty is over. All hail the new kings, Samsung Galaxy, your 2017 World Champions.
Every single player talked about revenge against SKT, and they got it. Faker is destroyed.
once a phenomenon like League of Legends happens, you can't undo the effect it's had. It may evolve, it may change, but it doesn't just disappear. The impact, I think, has barely begun to be felt. It might even be a generation before we truly see it.
Our parents always kind of thought that we would stop playing these games. And I think we're just starting to hit the point where people feel like games are here to stay.
Okay, so that video I think hits on a lot of key themes that we'll touch on later on, not only the size of the market, excitement about where it's going, but also the fact that it's a very kind of nascent industry that will change and will evolve, and it's kind of path dependent as to how you set up these leagues early on as to how they'll be in kind of 10 years. But we didn't want to just rely on our own background or that video for assuming that this was an important topic. We also did speak to a pretty broad range of folks in the industry as kind of a market test to make sure this is an important topic. And we've got a couple of quotes here that I won't read out in full, but in short, the two key themes, I guess, are one, yes, it's an important factor is competitiveness in people's interest in watching, playing, and being monetized ultimately. But secondly, that it's not just fan numbers, it's not just viewership that this drives. You can see the comments on the right, which are a bit small, maybe on the screen, but comments that this can really lead into commercialization in a number of different ways. It could be advertising, it could be in this example, betting, in-sport betting, things like this, which are a lot of different offshoots and would allow games companies to monetize fan engagement and competitiveness. So that's the kind of thought process that went into our project. I think it's useful for everyone to just have a little bit of background on how the industry is set up, and then going into kind of the data behind our project. So maybe I'll hand over to Nico to kind of run through that.
Thanks, Joe. All right. So let me touch upon a little bit about the industry. I believe all the audience is aware as to how big the industry of esports today. So just to put some more perspective on it, it is expected in 2023 that the esports industry will reach around 650 million people will watch esports. And to put it into context, that number is 8% of world population. It's 15% of online population, and by that time it will be the second most watched sports in the US. Interestingly, 57% of that viewers reside in Asia Pacific. The number has been growing at 65% from the 2018 level, and expected to continue to grow at a double digit for the next 5 years. So it's massive, and it's continued to grow fast. So here we kind of like to give a sense on the level of monetization in the industry, which we think is still very low. So we have two bar charts here. Let me start with the first one on your left-hand side. So this shows the viewers of the League of Legends, the World Finals, which is like the final tournament that they held annually. So we compare the viewers with the finals from MLB, NBA, and NHL, and we see that the LOL finals viewers is much higher than them. They are only losing out from NFL finals. Yet the entire, not just League of Legends, but the entire esports industry only recorded $1 billion revenue in 2019. So using the average from the four big US franchise sports, the average revenue from those traditional sports is around $10 billion. So esports industry only make 10% of the traditional sports. So we do feel the level of monetization is still suboptimal, and they are positioned to actually continue to grow as they reach more viewers and more audience in the future. So on this slide, we just want to quickly just give a quick glance in terms of the value chain in the industry. We would like to highlight the importance of leagues along these value chains, and we believe that the leagues is actually the platforms that can be used by the games publishers or developers to actually use that as a monetization platforms. So it's pretty much follow the similar revenue model of traditional sports, where leagues can can sell their media rights, the broadcasting rights, and also get sponsorship revenue as well. So on the next slide, we just want to show that sponsorships and media rights is typically the main revenue streams from coming from a traditional sports point of view, and we try to compare that with the one that we've seen in esports. So I believe everybody is familiar with media rights, basically the price paid by the distributors for broadcasting the gaming content in esport context to the audiences. So here we are talking about the likes of Twitch, YouTube Gaming. So they are essentially the distributors that buy and pay the media rights to the league operators, and sometimes the league operators is also the games publishers. And here on the right hand side, you can see on the purple highlighted, the media rights is only make up 17% of total esports revenue. And if we compare that number with NHL, NBA, NFL, the number is relatively still low. So we see potential upside for esports, for league operators or games publisher to actually push this number going forward. And we've actually seen some of the big blockbuster media rights deals that's actually happening in the past 1-2 years. YouTube Gaming has been very aggressive, and also Amazon is also start entering into this space as well. And before we move on, just want to highlight at the bottom of the slide that this is something that we actually quoted from the Q3 last year earnings release from ATVI. It's Activision Blizzard. It's one of the big games developer companies. So they also indicated that the viewership is a great indicator of the health of any leagues, and they also continue to commit and introduce competitive and collaborative social features to actually try to deepen the engagement. So here, the other key takeaways that we also want to highlight is to really improve this important revenue streams. We noted that the competitiveness balance is key, right? So that's something that we actually, like Joe mentioned earlier, that's something that we would like to see, whether esports having the same level of competitiveness that what we have seen in the traditional sports. So on the next chapter, we would go into the analysis that we've done for our project to really just measure the competitive balance of esports. Obviously, there are so many esports leagues happening in the world. We are trying to focus on 2 leagues. This is one of the largest leagues, esports. They've been around for quite some time. So we chose to focus on 2 games title that have a big esports league. Let me start with the first one, just to give a quick background about the games. So League of Legends is developed by Riot Games. So Riot Games is also owned by Tencent. The eSports tournament that they are doing every year, typically having a prize pool up to $7 million. They have around 100 million peak concurrent players, and they do have regional leagues around the world. So we only focuses on regional leagues that actually directly owned and managed by Riot Games. So leagues based in North America, Europe, Korea, it's actually the leagues that's actually managed and operated directly by Riot Games. There's those leagues that we are looking at and use that as a base of our analysis. The second one is Overwatch League. This game is developed by Activision Blizzard. They have a prize pool around $3 to $5 million a year. They have about 40 million concurrent players playing the games, and Overwatch League is arguably the first franchised esports league. So they have a city-based teams. They do have a regular season and playoffs. So this is pretty much like mimicking the traditional sports that we see in the US, like NBA and NHL. So that's the leagues that we are focusing on in our project. And in terms of the analysis methodology, we are using a null Scully method and concentration ratio. This is a very straightforward, very simple. So essentially, null Scully trying to do is actually just to compare what a league would actually look like in a perfectly competitive world. So the closer the null Scully number to 1, meaning the more balanced is the league. So we use the idealized standard deviation to come up with the null Scully number. And the second methodology is the concentration ratio. We are essentially looking at the market share of the prize money that is actually secured by top 4 teams. So you can see this ratio pretty much as the one that we've actually we've pretty much use it in the business context in Herbert Innovation Index. So this is the same thing. Essentially, we use the total earnings earned by the top 4 teams divided by the maximum possible payout of the prize money in that particular year. That's on the methodology. In terms of the data source, again, this is something that we spend a little bit more time trying to find a good set of data that we can use to come up with this analysis. And we pretty much source the data from liquipedia.net. So you can think liquipedia.net as a Wikipedia for esports. So essentially, you can find everything about esports, about the tournaments, about the players, about the results, and things like that. So a lot of good stats that we actually used to come up with our null Scully analysis. And for concentration ratio, we source most of the data from esportsearnings.com. This is a quick summary of our null Scully. Just want to highlight some of the interesting findings that we noted from that. Let me start with the Overwatch League. So here on the line chart, you can see in 2019, there is a significant improvement in terms of competitive balance in the Overwatch League that we've noted. And coincidentally, it also happened in 2019, whereby that year ATVI Activision also added more teams actually in the league. From 12 teams in 2018, they added 8 new city-based teams in 2019 to become total. They have about 20 teams in the league. So the increased number of teams in that year, we suspect that it's also improved kind of like the competitive balance of Overwatch. Whilst the League of Legends, we actually observed quite relatively stable null-scaling number throughout our analysis period. But if we look deeper across the 3 regional leagues that we are focusing on, the North America, Europe, and Korea, we noted that the North America and Europe has a lower the null-scaling compared to the leagues in Korea. So we see that North America and European leagues have a relatively better overall competitive balance than the one in Korea. So the average null-scaling number for Overwatch and League of Legends is hovering around 2. Again, this number is going to be meaningless if we are looking only from an esports perspective. In the next chapter, Joe will touch upon this, and we will compare this number with the one that we've seen in traditional sports. And moving on to the concentration ratio, this is very simple ratio, and we observe that the top 4 teams in both League of Legends and Overwatch leagues, they have been collecting more than 50% of the prize money over the past 3 years, and this high concentration ratio we strongly perceive as a sign of a weak competitive balance across the 2 esports leagues. So in the next chapter, again, like I said earlier, that we are very interested and very excited to actually compare this with what we see in the traditional sports and how we think that we can improve the level of competitiveness that we see in esports. So I'll hand it over back to Joe. Go ahead, Joe.
Yeah, great. Thanks, Nico. So yeah, as Nico said, that number is kind of meaningless without context as to how it compares to physical sports. So you can see here we've plotted the null-scaling ratios that you just heard, the low 2s numbers versus physical sports. And as I said at the start, these have been studied kind of in quite a lot of depth over time, by region, by sport. And as a reminder, a lower null-scaling ratio means the sport is more competitive. So you can see on this chart that European football, soccer, depending where you are, is very competitive, and that kind of anecdotally makes sense. The English Premier League, the German leagues, the French leagues, maybe less so recently, but the French leagues have garnered huge viewership numbers across the world, largely because, or one of the key factors that's identified is because they're incredibly competitive. In the Premier League, you can have bottom-ranked teams beating Manchester United or Chelsea or whoever it is, and that excitement has led to the Premier League being watched throughout the world. We've also marked on here the US sports, and we'll go into a comparison of the factors that drive competitiveness. But you can see, just back there, Nico, you can see the bottom, the main conclusion is that the esports numbers are higher than almost any other sport. The esports leagues are less competitive than almost any other sport in the world. And so now going on to the next slide, we will go through briefly a couple of these. I don't want to tick through every box, but how we thought about this is, look, okay, it's going to be interesting to say it's uncompetitive, but again, that's only really interesting if it can be changed, if you can make it more competitive, and therefore you can get more value from the league and actually kind of make a difference for shareholders, for gamers, whatever it is. So we started thinking, okay, how competitive could esports be? Is it naturally limited by some factor that means it just simply won't be a competitive sport? And so we read up on what drives competitiveness, and 4 of the big factors are listed here. The first one is contract policy, and so this really speaks to how players are able to move between clubs, whether there's a draft system for in the US leagues, better young talent goes to worse teams. That helps competitiveness in the league. The second one is revenue sharing. which means essentially that the wealth is distributed amongst all teams. You can't have one extremely wealthy team, which can therefore dominate. The structure of the leagues in terms of promotion and relegation is very important. There are, in the US leagues, and this is, I think, why a lot of the US leagues on the last slide were kind of higher, less competitive than European sports, is because you have franchises as opposed to promotion and relegation. And when you have franchises, there's a lack of incentive to perform when you're at the bottom of the league. There's no fear of relegation. In fact, quite the opposite, because you have a draft system in the US. If you come bottom, you're going to get better talent in the future. So you have this factor that means what I said about the Premier League a minute ago, where the bottom team can beat the first team. It rarely happens in US sports because of those disincentives. And then finally on accessibility, this is the concept that a sport is less competitive if less people can play it. So a good example is maybe Formula One, where not many people are wealthy enough to participate in Formula One, and therefore there aren't many players, and therefore you have a relatively uncompetitive sport. That's not the case in European football, where everyone can play. But it's actually, and again, you may remember from the last slide, NBA was really kind of high up there in terms of uncompetitiveness, and we see accessibility as a big factor there. There aren't many people. The pool of talent for NBA is relatively small because you have to be 7 foot, plus to play the sport. So when we think about all those factors, we've kind of ticked and crossed them for physical sports. But when we look at eSports on the right-hand side, we see that there is no regulation around contract policy, draft systems, no salary caps. There is no revenue sharing in place, and there is a franchise system. There isn't the promotion relegation policy. And all those things can be changed. All of those things can be improved, and all of them are limiting competitiveness today. The good news is the accessibility point, which kind of can't really be changed. The NBA can't really fix the 7 foot problem. That is okay. It's a highly accessible game. It's played by a huge amount of people, and so you're okay on the one that can't be fixed, and there's opportunity on the ones that can, which is, as I said, why thinking about this topic is of interest. So moving on, that discussion naturally leads into, okay, but what does this mean? I think there's actually a question in the chat about, what does this mean from maybe an investing standpoint, or ultimately, what does this mean, I guess, for shareholders? We did look at this report. We kind of tried to narrow it down as a side note. Kind of an important part of the project is to really focus on one question or one stakeholder or one actionable conclusion from the report. And so where we kind of took this was, okay, what does it mean for one of the big stakeholders in this industry, which is Activision Blizzard is the one we focused on, simply because they're a public company, multi-billion-dollar market cap, and we noticed they had already been making very public statements, actually in every quarterly report, about the engagement and opportunity of their esports leagues. We've got a quote here that I won't bother to read out, but that's why we thought there would be an interesting avenue for this report. And then on the next page, it's probably the next few pages, we ultimately pulled together a full kind of model DCF valuation for this for the company, and what reform could mean both for viewership, engagement, and monetization. I won't go through every number of the DCF. It's not the most exciting thing to walk through on a screen. Always happy to share the reports with anyone who is interested in doing that. But just so you have an idea of kind of how we approached it, there's, again, I mentioned earlier, there's kind of two factors. There's the number of viewers that are pulled into the sport. And here it's interesting because a lot of people play these games, but you're trying to translate that into viewers of the competitive leagues. They're not necessarily complete newbies, novices to the sport. They probably play the game already, but it's that kind of translation process. So we really built up our operating model and our viewership model based on using broker kind of research to some degree, quarterly reports, annual reports, but getting the number of players, the degree to which those players translate into viewers, and then how those viewers split between the playoffs and the regular season. And one interesting thing of what we found is, there are a lot of people watching. In fact, basically everyone who watches esports competitively watches the playoffs, the end season competitions. But very, very few watch the regular season. And we do think that's a factor driving that is, again, the competitiveness. That during the regular season, it's not a very competitive league. There's not, the stakes aren't there. There's not much excitement. And it's only when you get to the playoffs, when you've got the very few best teams, that it's actually competitive and fun to watch. And so we highlight in red with the little asterisk the fact that only 0.5% of viewers watch the regular season today. And the point of highlighting that is not to say that we know what that will go to. This is a very hard thing to put a number on, but simply to say there is huge opportunities for growth if you can translate people from the playoffs into watching full seasons. There's that note at the bottom left, NBA, for example, 46% of people who watch the playoffs watch the regular season. We're not assuming you go from 0.5 to 46%. We have assumed as a kind of working assumption you can get to 6%. We thought that was a fairly conservative assumption just for illustrative purposes, and we run that through the numbers. But the kind of key takeaway from the slide, I guess, should be that we have tried to be quite conservative as to how these drivers translate through the operating model that we built. So on the next page, again, going back to this concept that there's different ways that this competitiveness, engagement, viewership will translate into value. There's two different kind of factors at play here. We've called them quantity and quality, but just to kind of highlight a couple of the assumptions in the model, the one kind of revenue stream that creates value is merchandise sales. In the same way as physical sports, people buy shirts, people buy caps, people buy whatever. In this, for this factor, we didn't assume that people would spend more per person just because they thought the game was more exciting. Didn't necessarily mean that they would buy another shirt, but it brings in more viewers. So you can see on the left-hand side, spending per viewer is flat. We kept that constant, fairly conservative assumption, but the revenue actually, it does pick up because you get more viewers. You get more viewers, you get more people buying shirts, etc. That's in comparison to a few other factors that we call kind of quality or yield, maybe is another kind of way to think about it, like sponsorship revenue, which not only does that grow because of the quantity of people and the quantity of people that advertisers can reach, but also those advertisers are willing to spend more dollars per person on a more engaged viewership audience. That concept is, again, fairly well fairly well studied. Advertising rates for halftime shows in the Premier League or in the Super Bowl or whatever, where you have a really engaged viewership audience, are higher than when you don't. So you have these two concepts, which again, there's only a few drivers we tried to flex in the model just for simplicity, but you can see the potential number of factors and that they kind of play in different ways in terms of creating revenue and value. So on the next page, I think again, this is kind of saying the same point, that where we ultimately got to, and again, I don't think we've put the backups even in the appendix, but happy to send them around to anyone who's interested. We ultimately said, look, current price of Activision Blizzard, there are these two different factors. You're going to have more viewers, you're going to have a better yield on those viewers, and that's going to get you to a kind of new share price that I think it's this 22% upside. So it's real value that Activision could potentially generate by enacting these reforms, creating more engagement and monetization. And then I think the next page is a kind of more detailed DCF, also just to make the point that the way to value these companies is both on an EPS basis, multiple basis, but also with a DCF. So we did both. You can see the outputs to our DCF here. We did the full kind of WACC analysis. We did a full public company comparables analysis, discounted that back to today, to understand what those assumptions in our operating numbers could mean for value. The other factor here is that, and we didn't include this simply because some would say it's aggressive. Here we held the multiple constant, the valuation multiple that's applied to the business. You could argue that a more diversified, potentially high growth business that is more focused on esports rather than game licensing today would command a higher multiple. So there could be even more upside to the share price that we projected. But for the sake of simplicity, conservatism, we simply flexed the operating assumptions, flowed through the viewership numbers, the monetization yields, gave us a new DCF cash flow profile and EPS number. So that's how we approach valuation. And then we kind of pulled that conclusion into, I guess, the report's conclusion on the next couple of pages, which are, look, there's a lot of opportunity here. I think it's clear that Activision, and this has actually been happening since we did our report, funnily enough, which may or may not have been because we sent our report to Activision and we sent it to the investor relations department. Maybe they took note, but it's been clear that they're actually trying to fix this problem. Activision very recently changed the size of the teams that compete in order to try and make it a more competitive experience, as these articles say. They are trying to rebalance the makeups and the franchise process and the like, but we think they're focused on the wrong things. The right things that they should be focusing on are on the next page, and it's kind of things I mentioned already, so I won't go into them in great detail. Hopefully the concepts came across, but it's things like salary caps, things like revenue sharing, and team expansion. They're the three kind of rows that I highlighted that could be fixed, and we do think they need to be fixed now, because this game really is path dependent. As the video right at the start showed, this is a very quickly evolving sport, and very quickly evolving kind of viewership level of engagement, and that means if you set that path dependency off in the wrong way, people think of this as an uncompetitive and boring sport league, it's going to be very hard to reverse that. So when we actually sent this report to Activision Blizzard, we really did hammer that home, that this is an opportunity to create growth, both in the short term and excitement, but also put the kind of leagues on a path that mean there will be substantial shareholder value created in the long term. So conclusion, I won't repeat everything here, but that we think there's a huge value to be created from those three items I mentioned. Huge opportunity already exists, but it needs to be captured, and it can only be captured in a world where fans are engaged and monetized off the back of that, and that relies on competitiveness. So with that, as I said, I mean, there's a lot of detail clearly that we skipped over. The report, just so that you all know, is about 20 pages long, excluding data and appendices and the like. 5 team members, 2 of us here today. So always happy to, take questions today, but also follow-ups thereafter. I actually think a couple of the other team members have joined the call as well, and they're lurking in the background. So I might call on them to help answer any questions that you might have.
Okay, excellent. So thank you. Yes, so we now open the floor for questions. So we actually have received quite a number of chats from the audience. But if any one of you would like to ask the questions or voice out your questions, please feel free to unmute yourself. And I just noticed that Alberto would like to ask one question, right?
Yes, just quite here in the middle of not esports, but kids sport. I'm in the playground with my kid. But first of all, thank you very much for everyone here and for the report and the involvement of such data in esports. I was amazed a few years ago in Macau. It was launched the first esports tournament on Asia. Now it's global. And I'm quite impressed about how the market evaluates so much. You mentioned $1 billion US on that time, counting with China probably is better, is even more. My question is simple: how do you see yourself with these data in esports in China leagues when it jumps to the global market? Thank you.
Thank you, Alberto, for your question. So Joe or Nico would like to respond?
I'm
Joe, you want to start
not
first?
sure I'm not sure I quite heard the question. There's a bit of background noise.
You want me to repeat?
If you don't mind, just the last bit of the question.
I guess we have lost Alberto, but never mind. We have quite a number of questions in the chat box. Maybe we start with the questions from the chat first. So the first question was actually from Samir about media rights. So
I could maybe ask the question if that's better, Catherine. I could maybe ask it real time.
Yeah, I would like to invite you to unmute yourself and voice out your question. Thank you.
Awesome. All right. Thank you so much. First, the team. It was a wonderful presentation. Very, very insightful. The question was on the point on the slide when we were showing that media rights related monetization or revenues with esports is about 17%, whereas for other sports is about 25-26% or of that range. So I was just wondering if there's a correlation on number of viewers to how much kind of media right revenue we get. Is there a benchmark or is there a number? And a related question to that was, as in, if we talk about a league, what's a typical size of the league in terms of revenues? Is it about like revenues of a league including sponsorship, media rights, and all of the other revenue streams? Is it like $100 million, $150 million to it? What's a typical size? If you're saying that 1 billion is the total size of the industry, what's a large League of Legends, maybe tournament size in total?
Yeah, perhaps I can take that. Joe, you can add on later. So I guess I'll start with the first one. Samir, thanks for the questions. Yeah, I think we do see increasing trend of media rights deals that is actually happening. We do have two data points that we can use as a reference. I think the latest media rights deal was the one that happened in China. So I believe Huya has just signed 5 years media rights deals to broadcast exclusively League of Legends, all League of Legends leagues in China, region for the next 5 years. They signed for $310 million US. So if you average that in annual basis, is around 50 million, which kind of in line with the 2020 deals where YouTube Gaming's also paid about, I think, $160 million US to Activision, right? Blizzard, to broadcast a couple of games, Call of Duty, Overwatch, and I think the other games that is also owned by Activision. So I think the average media rights annually that is being paid by the broadcasters, Twitch, YouTube, is around 50-60 million. And we do believe that there is a linear correlations between the number of viewers and also the amount of the media rights. We haven't calculated yet whether it's how much the media rights per viewers, but we do believe there's the linear correlations on that. And the numbers will keep increasing, because I think previously, through 3-4 years back, if you see, Twitch only pay about $10-20 million media rights annually. Now it's around 50-60.
Okay.
That's I think hopefully address your first questions. The second questions, I guess, can you repeat again just to make sure that I addressed that correctly?
Yeah, it's just trying to maybe approximately understand what is the size in terms of revenue for a league.
Yeah. So as you know, the league of esports is a lot. It's so many, and the thing about esports tournament is actually not just the game developers that they create their own competitive leagues, but everybody is kind of like it can create, and some everywhere in the world, they can create their own esports tournament, right? So it's something that actually it's really hard to track, but League of Legends and Overwatch, we do believe that with the prize money that they are paying, it's something that perhaps from 10 to 15 million US dollars, but it's also coming from a combination of revenue streams. The big one is going to be media rights. It's something that we cannot actually, we need to split it by games, because sometimes they sign the deals for a couple of game cycles, but media rights is the big one. Sponsorship, merchandise, and some other sort of like licensing revenue that also secured by the stakeholders, in this case game developers. But again, if you ask the numbers, it varies. This can go as low as maybe 1 million to maybe 50 million US dollars, right, depending on the games and depending on the region.
Right. And then if I combine those two answers, is it fair to say that if, for example, media is about 20% of overall revenues, and it's, for example, as we discussed about the example that you gave, 30 million for 5 years, so about 6 million per year. So about 30-35 million would be a tentative revenue number for a large event. All right. Thank you so much. Thank you.
Okay, thank you. So Alberto, we lost you earlier, so you're now back. Would you like to ask your question again? Hello, Alberto.
Hello. Sorry,
Yes.
my connection is quite not efficient.
No problem, no problem. We can hear you now.
Can hear? Okay, I think I'm going to make it shorter. I didn't understood if the data was combining or included data tournaments or China tournaments and China leagues. That's why my question is. I cannot hear.
Got it.
Hello?
Nico, you're probably best to speak to the different leagues that we captured in the data.
Yeah.
Yes.
Bye. Sorry. I actually still didn't really catch it.
It was just whether China is included in our data set.
China. Oh, all right. China is a bit unique as a market. So as I just mentioned about the recent media deals. So China is kind of like exclusive in terms of the way they broadcast the games. They don't really like being part of the world, sort of like a global tournament or global leagues, and therefore it's kind of like hard to actually put that into our analysis, because we don't really can catch the whole dynamics that's actually happening because of some limitations that we cannot get. That's one of the reasons. And then again, of course, China is big, and definitely some of the biggest market, I would say, for esports in terms of the viewers.
Okay, thank you very much.
Alberto?
Yes, I was curious because I'm based in Macau and we have a tournament a few years ago, and that's why I'd like it to see how much have been evaluated. Thank you very much. Thank you.
Okay.
Thanks,
Thank you,
Alberto.
Alberto. So there is another question from the chat box from Pamela. So Pamela, you're here. Can you unmute yourself to answer a question about the long-term competitiveness of the esports team?
Hi, thank you for the presentation. It's a really structured way to evaluate the whole industry. And in fact, I am still considering to invest in an esports team in Asia. And then I'm an angel, an angel investor. And then one of the major questions I have is that I was told that the standard contract of the esports player with the certain team is only 1 year, as compared to maybe like several years for like traditional sports team. And then my main question is that I see the revenue potential of a certain team mainly depends on the competitiveness of these players. So how would you suggest that we can evaluate the revenue stability or potential of that certain team? Because currently its players, its teams doing quite well in the league. So is that any, or is this like a market standard, or just...
Yeah, no, it's an interesting question, and it's one that we thought about a lot as we were pulling together the report. We were worried that because of this structural factor that contracts are only kind of a year, we were thinking competitiveness might actually be very high, because a team that has the best players, well, those best players just leave after a year, spread themselves around other teams, and then that team doesn't win next year. So you have what looks like a very competitive league. The funny thing is that obviously, as Nico went through, that didn't come through in the data. And so whether that's because players have very or relatively short careers, and winning teams because of the lack of structure around revenue sharing and draft systems, are able to replace the best players with the next crop of best players, on a rolling basis, and stay as the best in the league. That could be a factor. Or maybe players just don't leave. Sure, they have 1 year contracts, but that doesn't necessarily mean they leave. And there is, I think, in this again, relatively nascent stage in the league's development, more of a drive or a need for players to create a brand, and that brand is often associated with the team. You know, players can't necessarily go off and do their own thing in the same way as a David Beckham or a Cristiano Ronaldo could go to any team and be a superstar. You know, often you need, because it's a relatively new industry, that kind of brand, team kind of name, players around you, infrastructure. That means that even though it's a one-year contract, maybe players do stay with teams, and that creates the kind of uncompetitiveness and stagnation, as opposed to the kind of one-year contract moving around concept that you mentioned. But definitely interested to hear if you have a different perspective. Sounds like you know the industry well. Good to hear it.
Thank you.
Cool.
Okay, great. Thank you, Pamela, for the question. So next question is from Kelvin, but I don't see Kelvin in the audience list. So let me ask the question for him. So the question is, can you share what proxies there are on the stock market that one could use to gain exposure into this esports sector, if there is any? Thank you.
Yeah, happy to quickly take that. So as you said, the report looks at Activision share price and value. That is, I wouldn't say a proxy for the stock market, and it's a way to invest in this concept. Activision is a very broad-based stock or company, which gets exposure to a lot of the verticals that Nico walked through earlier. So it is a kind of a pretty diversified, broad bit of exposure that you're getting. There are a lot of other public companies in the sector. Nico mentioned Huya, which focus on kind of live streaming in China. Amazon have bought Twitch. It's not a very focused bet as an investment. Probably the best answer to this in terms of the way you phrased it, proxies on the stock market and exposure to the sector, is to do it via an ETF. There are a lot of ETFs out there. I think two of the big ones are ESPO, and NERD, NERD, which are, you know, they hold a basket of whether it's 20, 50, 100 esports related companies, and those that I mentioned, your Amazons will be in there, but also your more focused names like Activision, whoever else. So I would say that's the best kind of broad stock market exposure to the sector.
Okay, thank you. So then the next question is from Vivek Kannan. So actually, Vivek Kannan has asked two questions. So can I invite Vivek Kannan to voice out your two questions? One is about stakeholder value and the other is about operating margins.
Hi, thank you for the questions. So the first one is on the ecosystem. So who ends up capturing large part of the value? Is it the game creator? Is it the teams that you mentioned, the publisher, or is it the event manager or distributor? So that's question one. The second one is, I noticed your deck on the operating margins of Activision. They seem to be very, very high, almost like classifieds companies, mature online classifieds companies. So it would be great if you can give some more color on the longevity of the operating margins, which seem to be very high. Thank you.
I think I can take the first one, Joe.
All right.
That's good. I'll do the second. Yeah. I think thanks for the questions. I think we try to look back what happened 10 years ago in the industry, right? And then back then, what we've seen is actually the game publishers, they only rely on licensing revenue when they sell the, sort of like give and grant the license for the league operators to use their games, right? But the recent past years, we see that more and more game developers from Riot, Activision, they create their own competitive leagues for their own games, because they know that the big chunk of the revenue is actually coming from media rights and sponsorship. So that's something that they are trying to expand, not just coming and getting the revenue from the licensing, but they also want to get a big chunk of the revenue coming from the media rights and sponsorship.
And then on the second question, so yeah, these games and in particular the leagues are extremely high operating margin businesses. I think of them as increasingly kind of like almost biotech businesses, right? There is a huge amount of investment up front and R&D into creating a game. But a lot of these games, you know, League of Legends is a good example, have been around for decades now, and the operating margin and the spend to keep that game, you know, current and live, it's very low. The impact of, or the margin in producing the game and hosting the leagues is the margin is very high. You know, that maybe differed from gaming companies that were solely focused on distribution of games in the past, where it was, you know, your cassette or your disc or whatever, and there was real kind of cogs to producing a game. That's not the case now, right? Where it's all kind of virtual distribution, and you've got real franchises, real kind of games that have real kind of legacy fan base and get, you know, bought in huge numbers without big CAC or, you know, customer acquisition costs associated with them. So you have these rollouts of new games that do very well, have very high margin, and when you can overlay leagues, you know, and sponsorship and everything else with frankly zero variable cost added on to do that, they do look like very impressive margin numbers. I agree.
Thank you. One small follow-up. To the first question, Nico, you said that the media rights, the publishers want to enter into event management as well. Did I get that correctly?
Yeah. So in the past, actually, there are a lot of third-party league operators that is actually doing their own eSports tournament using games from Activision, Riots, things like that, right? And then they are big. They are still big even today. Like some of the League of Legends that I mentioned in the slides, that some of the big leagues in certain countries actually still run and operated by those third-party league operators. But more and more Riot games, they start to take on and operate directly, exclusively in certain markets like North America, Europe, and Korea.
Okay, thank you.
Okay, thank you. So there is another question from Cherish about the examples of digital merchandise. So can I invite Cherish to unmute yourself and voice out your full question, please?
Joe, you want to take that?
Sure.
Cherish?
Is Cherish on?
No problem. So the full question is actually about the monetization. Well, the examples of the, well, what kind of examples would constitute as digital merchandise? So Joe, please.
Yeah. So the merchandise that we spoke to was not just digital. The first point, you know, people are spending money on, and you saw that in the video, that, you know, full stadium in the Bird's Nest in Beijing, everyone wearing shirts, caps, you know, everything. So merchandise in this case isn't just digital. The digital part of it is a big one. You know, the kind of example that is often given as to where money is spent is on things like skins and in-game add-ons that you might want to buy. Now, that's not necessarily the same as a Manchester United shirt or a whatever else as you think about kind of merchandise, but it is driven by engagement in the leagues. You watch a league, you're excited by the game, it makes you more likely to play and spend and buy that kind of digital merchandise, whether it's to help your in-game play, it's a better piece of armor or whatever it is, or there's a lot of kind of branded stuff. So you can play your game in the same way that you can go down to the park and play football in a Manchester United shirt. You can play League of Legends as an amateur player with a skin or a weapon or whatever it is that's branded to the team that you like. So people will spend money to do that. Usually it's in the form of there's engine coin, there's a lot of kind of crypto related expenditure in that kind of space, but again, it's pretty broad, and it's not just digital that this kind of translates into.
Okay, great. So there is actually a follow-up question related to digital merchandise from Rao, related to NFTs, because probably NFT is also quite hot now. So can I invite Rao to voice out your full question, please?
Hi guys, thank you so much. I'm speaking from Australia here, and very much a tax person, interested in this perspective of things, but NFTs is running hot at the moment. So I guess based on your research, conscious that what you were focusing on is competitiveness, but based on your understanding of the market and your understanding of, I guess, just the following that comes in this industry, non-fungible tokens are being used more and more to verify original merchandise, digital merchandise. Are you seeing there enough of a genuine kind of following and legacy piece as part of the turnover in the e-games market to warrant this kind of demand, similar to an NBA trading card? Or do you think are you seeing there's a new star every week, so people aren't going to remember things too much and there's not much value to that? I'm just keen to get your opinions.
Yeah, it's an interesting space. I mean, if I knew where the NFT market was going, or had known, then I wouldn't be in my apartment right now. I would be on the beach somewhere. So I don't claim to be an expert, but no, I think the growth of the NFT market related to eSports and e-gaming does assume a lot of growth, a lot of interest going forward. I don't think that the level of assumed interest is necessarily guaranteed. You used the word legacy. I don't think we have that yet to know that there's going to be the kind of multi-decade, multi-generational interest in these players, teams, whatever that you have in baseball or whatever, that create value. But that's kind of why this kind of report and making sure that you're on the right path to create that is important. I think there are areas of the NFT world which is very different from baseball cards or whatever, the traditional monetization, in the same way that the merchandise kind of revenue stream is different from just shirts and caps. It's now digital. There are companies trying to approach monetization through NFTs in a very different way. I'm thinking back, but I think one's called Zrun is one of the new popular ones, right? That's kind of in-game horse racing. You own a horse via an NFT, and then you can use it to race or to breed or whatever. Again, it's a very different angle to how you kind of approach it in terms of legacy, popularity, multi-decade creates value. This is instead kind of creating value in the metaverse and this is going very off topic, so I'll keep it short. But in short, yes, I think there's a lot of excitement. People are assuming very big things. I don't think it necessarily has to grow in the same way that physical sports do in order to create value for NFTs. But I would say that I've got no way of valuing them today, and in my mind, it's a bit of a gamble. But
and thank you for that. I guess and totally don't want to crystal ball what could happen in the market. I guess my specific question was more in terms of if we talk about NBA. Everyone on this call could probably think of Michael Jordan, some championship games, whether or not some of us were alive or not at the time, we could pick that name. I guess in your experience, are people able to pick certain games or events going back 10 years ago or 5 years ago in this industry?
Yeah, I think again that's a very good question, sir. Raul. Thanks for that. So I guess definitely there is a different structure for esports because the games keep evolving, right? And the life cycle for each games varies, right? Some games they've been around for so many decades, but some games only live up for maybe 2-3 years. So I guess the questions here is and the key part is actually for the game developers to actually maintain their franchise, right? For example, like Call of Duty, it's one of the games that has been around for so many long, and they have so many diehard fans, right? And some of the Call of Duty eSports tournament, I think in the past 5 years, there are certain teams that are really associated, they will win consecutively, I think within 2-3 years. That's something that perhaps if the games developer continue to do so and maintain the engagement with the viewers, with the players, this is something that could be a potential in the future that somebody will look back and see, somebody because the game is still relevant. That's the questions, right? If the game is not around anymore, I think it's not gonna be relevant. That's something that perhaps there is a potential there, but something that quite tricky, I would say.
No, that's great. Thank you so much for that. I appreciate it.
Great. So I guess the NFT topic is such a hot topic or big topic that might form a good one for the integrative project in our next cohort. Yeah, so it probably takes longer time to talk more about that. But there's one last message in the chat box, which is actually not a question. It's, someone like Rohit would like to connect with the presenting team. Probably there's some, collaboration or we can work together. Yeah, so Rohit, would you like to say something?
Yeah, sure. Basically, thank you for the presentation. So I was wondering if it's possible to connect with the team offline after this event. And what I wanted to do is apply the Noel Scully and the kind of analysis you have done to the booming, league sports scene in India, and benchmark that with global peers, and see if we can, recommend something to the stakeholders there. I think you might find some receptive audience because the scene is still evolving and people are receptive to new ideas.
Yeah, no, absolutely. We'd love to chat. I think it would be really interesting. I mean, the one that jumps out is the IPL and cricket, where there's so much money being spent. You've got franchise systems. It would be a very interesting analysis to do if you have enough kind of data going back to do it. That's the only thing that I would question, but interesting to hear other ideas that you have, and happy to chat offline.
That's great. Yeah, so it's great to have people interested in this topic or would like to work further on it. So Vivekanan, you just raised your hand. Do you want to add something, or you have any more questions?
Yeah, if I may add, since India was discussed, so what Nico mentioned, I guess we are in very early stages here as far as esports go, because India has a very unique internet market where there are people like me who have used the internet right from the desktop days. But the vast majority of Indian internet users, they have used it only from their cell phones because of Jio. So those users are now spending a lot of time on games like Garena's Free Fire, or League of Legends. So I think it will be interesting. Right now, the telcos are playing a very big role in distribution, event management. So Jio, Airtel, both are doing it. It'll be interesting to see how it evolves.
Okay, great. Yeah, so just one last question from me, actually, or in the interest of time, let's close the discussion. But I would like to ask both Joe and Nico about the future outlook of this esports topic, because you have been working on a project last year during the pandemic. So probably the pandemic might bring a lot of opportunities to esports, and it's still evolving probably. So what is your future outlook about this? How profitable do you think, or how long do you think this is a sustainable business?
Yeah, no, it's a good question. I kind of hit on it a bit at the start, but I think, as you said, the timing of the report was interesting in that we started the report really almost exactly at the start of COVID, you know, COVID could have ruined a lot of reports, you know, in terms of picking something that you're then in a totally different world and it's just not relevant. In our case, we, I guess, got lucky that if anything, it made it a more exciting, bigger industry. I think all the key themes that we highlight in terms of growth and recommendations still hold. They just have maybe either been accelerated or we have even more conviction about the importance of them. I think the numbers we showed, whilst again it's very hard to pinpoint the exact level and when you get to those numbers, I think all we tried to do is show that even with fairly conservative assumptions, you could have a real meaningful impact on shareholder value and value of the entire industry. And again, I think that doesn't change because of COVID. If anything, it accelerates it and makes it an even more important time today to make sure you're on that growth path as opposed to a stagnation path, and take this take the pandemic as a kind of opportunity for the industry to kind of grow.
Great.
Yeah.
Nico, would you like to add further?
Yeah, I just want to add a bit on that. I think the pandemic itself just proves and how agile actually the industry is. Again, we need to understand the DNA of esports is actually they are coming first from online to offline, right? So it just it just showed that how quickly they can adapt during the pandemic. If you see from the traditional sport, they delay the games 2-3 months. They try to understand and figure out what to do, but esports immediately, instantly, they just convert the physical tournaments into remote tournaments. That's something that interesting. And just to echo what Joe was saying, is basically this is something that is clearly give plenty of room for the stakeholders to really improve the structure of the esports industry, to really make sure that this is not just one hit wonder, right? This is something that they need to invest, because they invest a lot in the games. It's kind of like the huge fixed cost that they need to invest at the beginning, but esports is something that actually they can use to really improve and boost the ROI over the long run.
Mm-hmm. Excellent. Well, actually, I personally don't play sports or know esports, but I feel the excitement and I feel the great potential in this area. So thank you very much, Joe and Nico, for your sharing, very insightful sharing, and also thank you for the whole team for working on this project with very enlightening outcome. Yeah, so that we can learn more about this topic. So also for the audience, thank you very much for your very active participation and the great questions. We had a very interactive discussion today. So if you think of other questions after the seminar, feel free to connect with us that we can help you to ask our presenting team. And if you would like to get the presentation report or the slides, feel free to let us know. Yeah, so we will have future seminars upcoming in the coming months. If you are interested in the MSGF program, feel free to connect with us or write us email at msgf@ust.hk. So thank you very much again for joining us today. Thank you, Nico. Thank you, Joe, and have a good day. Take care, everyone. Bye.
Thanks, everyone.
Thank you.
Bye-bye.